Hey, what's up, my friend? So welcome back to this month's market analysis. So this is a video that I do each and every month, and to kick things off, right, I want to walk you through a couple of trades that I took, right, how I managed those trades, entry, exits, and much more. And after which, right, we will discuss a couple of trading opportunities that I will be looking at for this coming week and even this coming month. First thing first, euro dollar. So this pair, right, I believe I have actually analyzed this in last month's market analysis, right? So if you want to see the full breakdown, okay, just look at the previous month market analysis for January. But the core idea for this is that I said that I was bearish on this chart, on this market, euro dollar. And the reason is simple, is that when I look at this chart, to me, this is in a weak trend. Price has made a series of lower highs and lower lows, right? Basic technical analysis stuff. Where it gets a little bit more nuanced, right, is how did I manage to classify this as a weak trend. So to me, a weak trend is where the price tends to find support resistance, right, at the 200 period moving average. So in this case, since this is a downtrend, right, it tends to find resistance, right, at the 200 period moving average. It tends to retest previous area of resistance. So you can see over here, it tested once, tested twice, here almost a third time, and came back here a fourth time. And what's really sweet, right, about this particular level is that not only did it had a bounce off this 200 MA, it also had the confluence of this area of resistance that you see over here. And also you have this shooting star pattern, right, somewhat of a strong bearish price rejection from the seller. So this to me is a number of factors, right, that come together that made me want to short this market. So I went short on the next candle open. Okay, when the candle opened, next candle, I went short. Stop loss, right, was 1 ATR above this highs. I think it's somewhere about here, just 1 ATR above this highs. So what happened is that for this trade, right, since I understand that it's in a weak trend, okay, I am not looking to ride the move all the way down. I just have a target, which is at this area of support over here, around the 1088 level. So in this case, you can see that the market, it did went in my favor, and then it went against me. Okay, so you can see that over here at this point, right, when this price spike up, many traders have their stop loss just above this highs, and they will get stopped out. And this is why you hear me saying over and over again through my trading videos, my market analysis, is that I don't like to put my stops just above the highs or below the lows because of this particular phenomenon, right? The market tends to retest these highs, trigger those cluster of stop loss before it reverses back, to your intended direction. So usually I give it one buffer, I give it some buffer, like 1 times the average true range from these highs over here. So as the market now went in my favor, right, the way I manage this trade is very simple. I like to keep things simple. So I'm just going to have, right, a fixed target, as I mentioned over here, this area of support. This is my eventual target. And I'm just trailing my stop loss now because right now the price has moved in my favor. But I have no idea, right, whether it's going to, retrace all the way to my entry and hit my stop loss or continue moving to my target profit that I have in mind. So what I did is that I have a 3 ATR trailing stop loss that you can see over here that is shown using this particular line over here, this purple line. So this is basically 3 ATR from the lows. So let me just explain how this works. So for example, right now, the extreme low is at this point. So from this low, you add, right, additional 3 ATR. Let's say the low is X. Let's call it X. And you plus 3 ATR. You're going to get a value around this purple line over here. So this purple line serves as a trailing stop loss for me. Yes, I do have an eventual target at this price level, but what if the price moves against me? Right? Am I going to let it hit my stop loss? No, right? So this is where the trailing stop loss comes into play. So if you want to learn more about the average true range, right, you can just pull out that indicator, a quick one. Right, just pull out the ATR, average true range. You find out what's the ATR value over here. You multiply it by 3 and you realize that from the lows, right, you plus 3 ATR will be around this purple line over here, which is this indicator is called the chandelier stop, right, which is actually a variation of the average true range indicator. Okay, so that is for the euro dollar trade that I took, right, almost hitting my target. We'll see how this one plays out. And of course, right, not all trades are winners. I do have my losses along the way, and I'm about to share with you this particular loss that I have. So Swiss franc against the yen. So again, let me just walk you through the background of this particular market. So you just zoom on, right, you can see that the Swiss franc against the yen, right, it's bullish. Price has broke above this area of resistance, right? Price break above this resistance, and when it retests back this level, previous resistance, what does it become? Well, it tends to become support, right? Not always, not definitely, right? But there is that possibility. So this is where you let price action, right, be your guide. So I let price action be my guide. In this case, on the 4-hour time frame, right, you can see that this price has come into this area of previous resistance turn support, as you've seen on the daily time frame. So where I got long is when I noticed, right, the price forming somewhat of an inverse head and shoulders pattern, right? You can see that this is the left shoulder, this is the head, this is the right shoulder. And at this point, right, this was the level I was looking at, this highs. So at this point, I know that if the price were to break above this highs, I would have a higher high and a higher low. So this tells me that the buyers are in control, right? A series of higher high and higher low. Previously, what you had was just a series of lower high and lower low, telling you that the sellers are in control. I agree, right? That's why I don't want to step in front of that moving train. And also, I mentioned earlier that I have no idea whether, previous resistance will become support. So I let price action be my guide. And using this multiple time frame analysis on this 4-hour time frame, I was looking for a series of higher high and higher low. This happened to be in the form of a inverse head and shoulders pattern. This is not the only pattern. It could come in the form of a ascending triangle pattern. That's another variation that you can expect. So when I get the higher high and higher low, right, when the price break above this highs, I went long. And again, right, using the same technique, right, my target for this trade was at this highs over here, just before this highs, looking to capture that one swing. So again, I had my 3 ATR trailing stop loss, and in this case, the price break and close below it over here, and I had a loss on this trade, right? This is about a loss of about 0.6 R for me for this particular trade. So you can see that it doesn't always go in your favor. You're, dealing with probabilities, never certainty. Okay, so hopefully this couple of trading setups, right, step by step that I've explained, right, give you a good idea to how I analyze and how I trade the markets. So moving on, right, I want to share with you a couple of things, right? First one is Aussie New Zealand. So Aussie New Zealand, this is pure, right, technical price action trading analysis. So when you zoom out of this chart, right, I would say this market is largely in a range. Okay, the range can be defined from this area of support over here, possible area of resistance here, and another one over here. Why you see this is red color is because this level can be seen on the weekly time frame as well. So this is like a strong level, right? If you look at the weekly charts, you can see that this level is actually very visible on the weekly time frame. So this is a key level. So on daily time frame, you can see that right now the price has rallied higher over the last few days. Okay, and I have no interest, absolutely no interest to buy at this point. Because if you think about this, if I have to buy at this point, where do I set my stop loss? There's no logical level to set my stop loss. My stop loss, right, based on the looks of this chart, right, this will be the nearest market structure. And from this highs to this lows, you can see that the stop loss is pretty darn wide. And as you know, right, I don't like to set my stop loss just below this lows. Price could come down, spike below the lows, and then reverse back up higher. So what now? So this is where I use multiple time frame analysis, right, to help me time my entry. So at this point, right, I see that the price has broke above this area of resistance, or is in this area of resistance. So if you go down to a lower time frame, like let's say the 8-hour time frame, notice that this is the area of resistance over here. Okay, price has broke above it. So what I want to see is that the selling pressure is weak. I want to see that the sellers, they have difficulty pushing the price lower, right? So this is likely to appear in the form of a weak pullback, a small range candle pullback like this. Something like this, right? Notice this, the range of the candle, they are all relatively nice, tight, and narrow. This is what I'm hoping to see, right? Nice, tight, narrow range candle on the pullback. So this looks something like a bull flag pattern, right? You're familiar with the bull flag pattern, right? So when this pattern forms, right, I am now looking to buy because it has shown me that the buyers are still in control. Sellers, they are not able to push the price lower, because if the sellers, they are able to push the price lower, this would be somewhat of a false breakout. The price would just goes back all the way down lower. It's a false breakdown, right? And hey, right, I won't be looking to buy. So if this happens, right, we get a nice tight narrow range candle in the pullback, right? This to me is a signal to be alert for potential buying setup. So what I'll be looking for is, let's say price does trickle down lower, tight range, I'll be looking to place a buy stop order above this highs. So if the price breaks above the highs, I'm looking to buy. Stop loss again, just 1 ATR below this low, somewhere about here. As for targets, I will be looking at this area of resistance over here. This area of resistance is where I'll be looking to take profits. Okay, so if you just go back to the big picture, right, you notice that that level over here is this area where previous support could become resistance. So this is a key area that I will be looking at to exit my trade. And as for trade management, again, we can go with the similar concept I shared with you earlier. You can use a trailing stop loss, a 3 ATR, a 4 ATR. Okay, so this is just one way to go about, to trail a stop loss to manage your trade before it actually hits your eventual target over here. Okay, so this is for Aussie New Zealand. Moving on, just one more setup that I think is worth paying attention to is dollar Canadian. So dollar Canadian, you can see that again, look at the big picture, right? So before I put on a trade, I always like to look at the charts and ask myself, what is this market doing? So just zoom out your charts, or you can go up to a higher time frame, whichever you prefer. Okay, so just zoom out your charts a little bit, and you can see that this market is largely in a range. You can see that it's contained between this area of support. There's this resistance here and one more over here. So will this resistance hold? Well, I have no idea. So this is why I read the price action of the markets. I let it be my guide. Let it form a structure weakness in case if I'm looking to short, right, before I take a position. So what is a type of structure weakness that I'm looking for? Okay, so if you look at this on a lower time frame, right now the buyers are still in control. You look at 4-hour time frame, series of higher highs and higher lows, right? Everybody can see this, right? Series of higher highs, higher lows. So a structure weakness, or what I call a break of structure, occurs when price makes a lower high and lower low. This tells me that, hey, buyers, they're unable to push the price higher and sellers are in control, right? That's where I'm going to take a short position. And I'm not just looking to short just because there's a lower high or lower low. It's because I noticed that this market has come into this key area of resistance, an area where potential selling pressure could step in. And the break of structure sort of confirmed, right, my so-called hypothesis. So of course that's not the end, right? You still have your entries, your trade management, your targets, risk management, and so on and so forth, right? But hopefully, right, I have given to you these broad concepts to understand that you can apply for your own trading. So what could possibly happen now is, again, I'm looking for a break of structure. Price could come down lower, then bounce off, hit down lower. So you can see that in this case, maybe we could get a descending triangle, a series of lower highs coming into this area of support. If the price were to break below this area of support, I'll be looking to go short, looking to sell. I can set my stop loss just referencing from the previous swing high, possibly this high. It's over here, maybe 1 ATR above it, somewhere about here. Okay. As for targets, I ask myself, right, where is potential buying pressure likely to come in, right? And based on the looks of this chart, the higher time frame that you've seen earlier, right, I would say this line over here, this $1, 1.3050, this area is where potential buying pressure could come in. This is where I could have a potential target for this particular trade. Does it make sense? Now, if you've enjoyed the market analysis, right, then I want to welcome you to join Pro Traders Edge, right? This is my premium membership, right, where you will get such market analysis every single week, right? I usually publish this type of videos on a weekend to share with you my insights of the market, the trading opportunities I'm looking at, the trades I took, and much more. So that's not all, right? Because as a Pro Traders Edge member, you get many benefits that come along with it. So for example, you have access to the backtest research lab. So this is a lab, right, where I pretty much backtest the financial markets to tell you what works and what don't in the financial markets. So we have different stuff going on. We have, things that talk about stock markets, quantitative trading, and much more. So all this over here in the backtest research lab, and I regularly, add in new lessons, new findings that I have in the financial markets. Then also we have the weekly trade alerts. This is basically, right, the video that you've seen earlier, but it's on a weekly basis. So every single week I publish such videos, right? So you can see my analysis, my thought process, the trades I took, and you can, shorten your learning curve and quickly, level up your trading. So you can see that, every week we publish a new video on the markets. We have a premium trading strategy guides. This is for you, right? Especially if you enjoy reading my blog posts and you want a PDF version of it. So every month we upload new PDF trading strategy guides. It's free for you to download. You can just click on it, right, and you will be brought to a PDF link, a PDF page to download it. We have a exclusive training webinars for you to help you level up your trading, learn new trading strategies and techniques. Okay, these are exclusive webinars that you will not find elsewhere. Then we have trading books and investing books that I recommend. Trading checklist, right? So before you put on a trade, you can download this checklist to review it, right, to make sure that you're on the on the right side, on the right page, right, and not doing anything funny or silly, right? We have the proprietary trading indicators vault. This is for MT4 users. You can download all these indicators to help you with your own trading, like the MACD MT4. There's some issue with it. We have fixed it over here. We have the Donchen channel, news reporter that alerts to you, potential important news that's coming up, and much more. It's all over here in the indicator vault. And also we have the simple mean reversion trading strategy that you'll learn, right, to trade the market. So this is a very simple strategy for you to get started, especially if you do not know which strategy to go with. Start with this simple mean reversion trading strategy, because it is back tested, right, to identify first and foremost which markets tend to mean revert, which markets have a mean reverting characteristics, right? Then I explained to you, right, the setup to trade this type of mean reverting markets, right? So you really have the odds in your favor, right? Applying the right trading setup in the right type of market condition. Okay, so this is a mean reverting trading strategy that anyone can learn, right, even if you have no trading experience. So this is what you'll get, right, as a Pro Traders Edge member, right? New content are updated regularly for the Backtest Research Lab, weekly trade alerts, premium strategy guides, and much more, right? So I'll put the link below so you can check out Pro Traders Edge. And with that said, right, I hope you've enjoyed this video, and I'll talk to you soon.